Hi, this is Kribakaran Rajendran. Welcome to Trading with Groww channel. In this video, we're going to talk about day trading for beginners. So it's a complete guide for people who is looking to get started with intraday trading or day trading. See, for day trading, there is only 5 important factors that you need to keep in mind when you are getting started with intraday trading. Because with respect to intraday trading, the risk is much higher compared to a normal positional trader. Because for a normal positional trader, with whatever the money that he is having, he is just going to invest in it and then do a buy or sell transaction. But with respect to day trading, he is going to do a leveraged transaction, where if he is having 10,000, he can buy 50,000 worth of stocks. So because of this leverage, definitely there is a huge difference between a day trading and a normal swing trading. So we'll address what are the important 5 factors that you need to consider when you are getting started with day trading. See, with respect to intraday trading, the first thing that you need to keep in mind is the time duration. You do not have so much of time when you are doing day trading. You have only 6 hours between 9 o'clock, between 9:15 to 3:15. This 6 hours window is where you are going to get in and get out. So because of a limited time duration, your action has to be swift and very fast, and also it has to be very precise. So don't try to get in and get out very often, because that is going to increase your overall transaction cost. Instead, wait for the right opportunity, and when the opportunity emerges, then get into a trade. So for an example, the chart that you're seeing is the 5 minutes chart of LIC stock. So as a day trader, what I can do here is I can just wait for the first 15 minutes for the market to establish a range. And once that range is broken, then I can get into a trade. For an example, let me show you the range here. So with respect to LIC, so the first 15 minutes is this bar, and this bar. These first 3 bars is first 15 minutes bar. So I'm going to mark the high and low of these first 3 bars. So this is the high, and the low point is, this is the low. So what I'm going to do is, once this high point is broken, I will go long in this LIC stock, and once the low point is broken, I'll go short. So what happens is, after 15 minutes, the market neither moved up nor moved down, but after 10:15, if you see, the market started going up. So we were waiting for almost 1 hour for this specific range to be broken, but once it is broken, we will get into a trade. So this range high of 936 was broken here. So once it is broken, I would have gone long with that first bar's lowest stop loss. So 936 is my entry, 924 is my stop loss. So almost just 10 points or 12 points is my overall stop loss. And then I'll just go long and I'll hold it till end of the day. By 3:15, I'll close the position, where I have closed approximately around 974. So with the risk of 10 points, I'm able to gain almost 40 points. So always wait for first 15 minutes for the stock to establish a range, and once that range is broken, then get into a trade. So this is how you can wait patiently and initiate a trade with respect to day trading. So instead of directly jumping in and jumping out without any decisive rules, having these kind of set of rules will greatly help you to become a disciplined trader with respect to day trading. So let me explain what are the next factors that you need to focus on with respect to day trading. Now let me explain the part of risk management or money management. You know exactly when to get in and when to get out. The next part is how much quantity that you need to buy. That is very, very essential with respect to day trading. Because if you buy very small quantity, then you are missing a great opportunity. If you are buying a large quantity, then you are getting into a bigger risk. So you should find an optimal level where you can concentrate on, so that you will be able to buy the right quantity. That is what you call it as position sizing. So in this example, what I'm showing here is, there are 2 examples where I have a capital of 1 lakh, where I'm following a position sizing rules, and I'm not following a position sizing rules. So what would be the overall result look like? So first, let me explain without any money management rule. So what a normal trader will do. So when he's having a 1 lakh of capital, and if entry price, as per our previous example, if it is 936 for LIC stock, they'll simply buy 100 shares or 200 shares. And then by end of the day, it reaches 976. So they make a profit of around 4,000 rupees, which is 4% of their overall capital, considering 1 lakh as capital. So this is considering the stop loss of 924. So normally people, what they do is they'll buy randomly 100 shares, 300 shares, 500 shares. Instead of that, what you can do is follow a proper position sizing rules, which is going to tell you how many number of shares you need to buy. So for that, first you need to fix how much I can lose in this trade. So I always say a normal amateur trader will ask how much I'm going to make in this trade, but a professional trader will ask how much I'm going to lose in this trade. So in this regard, if you ask how much I'm willing to lose in this trade, I would say 5%. So 5% of my capital, which is 1 lakh, is around 5,000. So no matter what, if the stop loss is hit, I don't want to lose more than 5,000 rupees in this trade. If this is what my requirement is, then what will be the total number of shares that I need to buy is simple. You have the entry price 936, right? You have the stop loss, which is 924. So your overall risk is 936 minus 924. That's all. So your risk is just 12 rupees. So what you can do is you just have to divide this 5,000 rupees by 12 rupees. The risk, actual entry minus stop loss, going to give you the risk. So whatever the risk you are going to take with your capital, divide that by the actual risk as per the stop loss, which is 12 rupees. That is going to tell you what is the total number of shares that you need to buy. So 417 is the total number of shares you need to buy. So for that, what would be the actual blocked margin is around 4 lakh. Oh no, this is the overall 41 lakhs is the overall required margin. See, as I know. So for this trade, if I'm buying 417 quantity, what would be the approximate margin that gets blocked is, you can see it here, which is around 3.9. So almost 4 lakhs is the required margin. Since you have 1 lakh, you get 5 times leverage with respect to intraday, where you can buy 5 lakhs worth of shares. So we are not even utilizing complete 5x. We are using just 4x. Still, our overall risk appetite is 5% of our capital. So if the stop loss is hit, we are going to lose only 5%. So now you see, by end of the day, that stock moved to almost 976 rupees. So we ended up making almost 16,000 rupees profit, which is almost 17% of our overall capital. Whereas in the previous example, if you simply buy 100 shares, you are just going to make 4,000 rupees. But even if in this case, what in case if the stop loss is hit? So instead of market going up, if it goes down and hit my stop loss, and which the stop loss is 924, where if that is hit, I'm going to lose only 5,000 rupees. So still, it did not go beyond my overall risk appetite. So this is how you need to plan your money management rule. You should clearly know how much you need to buy before getting into the trade. This way, even if the market goes against you, you will not lose considerable amount of money. And the next thing that we can focus on is identifying what stocks to buy or what stocks to sell. So how do you find this? Is using a gap criteria. See, most of the day traders want action. They want the market to move, the stocks to move. So what kind of stocks would move is mostly the stocks which are in news. And these stocks which are in news will either gap up or gap down, right? So instead of going for finding out the stocks in the news or in the news channel, you can use the screener tool, using which you can easily identify what are the stocks that has gapped up or gapped down. And once you shortlist these stocks, then you can get into a trade. So for an example, I've run this scanner, gap up or gap down stocks. So what you can do is you can go to charting.com, click on screeners, and in the search, type gap and click on search scans, and click on the first one, gap up or gap down stocks, which is greater than 3%. So once you click it, that is going to give you the list of stocks which is opened in a gap up or gap down. So if you are going to go long, we can just look for stocks which has gapped up more than 3%. So these were the list of stocks which has gapped down more than 3% yesterday and had a phenomenal trend. For an example, consider PNB Housing. So PNB Housing, if you open the chart, you could clearly see that the stock, after a gap up yesterday, started breaking the initial range. So this first range, the first 15 minutes range was broken here, and once that first 15 minutes range was broken, the stock started going up. So for an example, the first 3 candle, 5 minutes, 5 minutes and 5 minutes, 15 minutes, as you could see, is where 687 is the overall high price. So once that high price is crossed, 687 is crossed, it started going up and ended up closing approximately around 755 rupees. So now you could easily get into a stock by filtering out what are the stocks that has gapped up or gapped down, and then from that list, shortlist and wait for the opportunity, just like I said during the first example, and then get into a trade. So not only the gap up or gap down stocks, with respect to the charting.com, if you go, there will be multiple scanners available based on multiple criteria. This fundamental scan you can completely ignore because that is not necessary for intraday. So for intraday, for an example, if you see, there are candlestick pattern breakouts like inverted hammer, dark cloud, gravestone doji, and likewise, there are morning star candlestick patterns, NR7, daily RSI oversold overbought. If you click on this, then you will be able to see what are the list of stocks that is trading in the overbought region and oversold region. So then you can finalize any kind of stocks from that and then get into a trade. So there are multiple options available with respect to charting, with respect to tools where you can make use of it. So it is not directly getting into a trade randomly. You can stick whichever is suitable for you, pick whichever is suitable for you, like candlestick patterns or any kind of price based patterns, and then get into that specific trade and close the trade by end of the day. So these tools like charting can greatly help you to filter out the stocks, and once you filter out, apply your logic of getting into that and getting out by end of the day and closing the trade. So this way, when you follow a rule based process driven approach, your overall stress factor will greatly reduce, because most people will struggle in finding out which stock to buy, when to enter and when to get out. But when you have these rules in front of you clearly, you should be easily able to take the trading decisions. And another way to use indicator based trading for day trading, I would highly recommend Supertrend, because that is the most simplistic indicator where you can clearly see the buy and sell arrows, using which you can get in and get out. So all you have to do is open any stock which you wanted to trade, click on indicators and type Supertrend here and click on it. That is going to plot when the buy signal happens automatically. See, for an example, with respect to LIC stock, the buy signal came on 28th itself. So on 28th itself, once the market opened as a gap up, around 900 rupees itself, it gave a buy signal, and that complete day it was in buy signal. And again, yesterday on April 1st, when the market opened at gap up, still the buy signal was valid. So as soon as the market opened as a gap up, you can directly get into it because the buy signal was still valid, and you can just trial the profits. Because in the previous example, I just told you can enter with a fixed stop loss. But how do you trial the stop loss is using which Supertrend? Because initially your stop loss was here, right? As the market starts moving up, your stop loss will also move up, your trailing stop loss will also move up, so that in case if market reverses, you will not lose all your profits, where you can close your profits the moment the trailing stop loss is hit. This way your overall profit is protected. So Supertrend not only helps you in identifying the buy zone and sell zone, it can also help you to identify the trailing stop loss level, so that if in case the market reverses, you can close in a reasonable profit. So coming to the last part, which is the psychological aspects with respect to day trading. So we have almost 48 lakh people who's trading in India every single day. So these people, when they are coming out, who's the other end? Like one guy is winning, the other guy is a loser, right? Because only when a guy wins, he can win from the person who's losing. So FNO is a zero-sum game. So specifically with respect to day trading also, it's a zero-sum game. One guy wins and one guy loses. So when there is a huge competition here, psychology plays a very, very vital role. But many beginners give least importance to the psychological factor, because it is not only those analysis that is going to help you. You should also have the right mindset to trade. Then only you will be able to stick to the trade when it is going against you. So the first and foremost thing that you need to keep in mind with respect to day trading is having the right set of discipline. So you should know exactly when to enter, you should know exactly when to exit, and you should know how much quantity that you need to buy. So all these three things we have covered with an example. So that is definitely going to help you out. And the next thing is, when you're trading live, never watch news, never watch social media. These gives you a great distraction. Say for an example, if you have gone long in a stock and suddenly that specific stock is coming in news, it could be a simple normal news. But when you look into it, you might start panicking. You might tend to think that, okay, this specific news is bad for this stock, but I'm bullish with respect to this stock where I've entered long, so I should immediately close the position. So these distraction will override your own rules and you will not be able to stick to the trade. And once a trade is placed, don't keep watching your MTM screen, because watching your MTM screen will give you an adrenaline rush. For every profit that is going in your favor, you tend to think that, okay, market might reverse, I want to close the trade early. So this urge of closing the trades early will always kick in when you closely watch your MTM screen. So with respect to psychological factor, try to keep your emotional imbalance. So this emotional imbalance is something where is definitely going to affect your overall trading career. So all you have to do is, in order to keep this emotional imbalance intact without having any kind of overall emotions overriding your own rules, what you need to do is have a clear-cut trading rules, follow that diligently. That is going to help you in the long run. So with respect to day trading, this guide is going to clearly tell you what are the things that you need to focus on, what are the things you should not focus on. Following this with a small set of capital, whatever the capital that you can afford to lose, get started with that. No amount of learning can possible without trading live. So no, you can keep learning, you can read all the books, but only when you take that first trade you're going to learn so much. So always keep in mind, whatever the money that you can afford to lose, start with that. Be it 5,000, be it 10,000, whatever it could be. Start trading live. Only then you will understand whatever the emotions that is involved with respect to day trading. Then slowly, once you get adapt to the process, slowly scale up the capital. So this is how you can get started with day trading and slowly gets more scaled up to a higher level. So I hope you found this video really helpful. I'll see you guys next week with another video. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.